Hi everyone. Every day millions of crypto traders ask the same question. Should I buy Bitcoin here, sell it, or wait? The problem is that if you open your chart, you will find dozens of indicators telling you different things. RSI might say one thing, moving average another, Bollinger Band something else. And social media has a completely different opinion. So how do you know which one to trust? That's exactly why I built Quantreef. Quantreef isn't designed to predict future or guarantee winning trades. Its purpose is to organize multiple pieces of market evidence into a structured view so you can make more informed decisions. Instead of relying on 1, 2, or 5 indicators, it evaluates momentum, market structure, liquidity, risk. Let's open Quantreef dashboard and see how to analyze Bitcoin. So let's say you want to see if you want to buy or sell Bitcoin right now, if it's a good idea. Dashboard have over 130 crypto coins. Each of them has been given a probability based on the 9 layers we discussed: volume, liquidity, market structure. Out of 130, 54 are bearish, 31 are sideways. So that tells me the market is more towards a neutral to bearish than a bullish structure. So that means I would not be buying any coins today unless the probability is really high. Let's move to Bitcoin because that's the one we are talking about right now. BTC has a price of 64,772. It has gone up by 1.28%. The system or dashboard shows 2 probability. If you buy long or go long at this price, the probability is 54% out of 100. And if you go short, the probability is 42. Both are really low. The recommended probability on Quantreef is 68%. So both of them don't have a tradable probability. So nobody will take a trade on this one. What a tradable probability will look like? On the dashboard, we have the top 5 probability. LTC Litecoin has a 70% long probability. So that's the only trade out of 120 or 30 coins that's had a tradable probability. But right now, let's talk about Bitcoin. If you click on the Bitcoin, you will see it breaks it down on why the probability is low, what's the structure like, and what are different indicators indicating. Right now, BTC is 765. The long setup is showing a 54 probability of continuation, and a short setup is showing a 42% probability of a downturn. Let's take the long setup with the higher probability. The long setup is saying if you want to go aggressive right now, the best price to go in is at 64,742, which is not far from this current price. And the stop loss would be at 64.94, but as discussed, not a good trade. Low probability, probably wouldn't work. The first TP1 is at 65566, which is probably a Fibonacci 1.28. The next TP2, so we break our profit taking into 3 levels to maximize our profit and trades. So let's scroll down. The great probability is 54%, which is way below our required 68%, where we recommend to take a setup. And also the readiness score, even when the probability is 68%, we require the trade to be ready. It has to have enough buyers, has to have enough volatility, has to have volume, has to have this market trending in the same right structure. So that requires the readiness to be at 90. So both of them have failed. So this is not a good trade. As explained, this is at a watch status. So anything below 65% probability is to watch. Is this lower conviction range? The engine is tracking the setup, but it's not ready for trade. Elevated means it's getting ready, but it's not there. It's between 65 to 68%. Recommended from here is when you want to take a trade at between 68 to 72%. One of the reason it's not ready is because of the liquidation and positioning. In this, you will see where the next liquidation zone is happening. The shorts are where the next shorts are going to be liquidated, where the top trader positions are, where the top trader accounts. They're both 60% of them are long, or the 39% of people are short right now. Overall, the long volume is a bit lower at 1.43 billion, and shorts are building up at 1.6. We pulled the data from all the major exchange, as you can see, and most of them, we pulled the dollar value. Beside the probability, the second most important thing that you need to realize is the liquidity heat map. Once you understand the liquidity heat map, that will change your life and how you trade. Like everybody before, I used to use my technical charts to understand where to put a stop loss, where to put TP, where to put an entry. And most of the times I will hit my stop loss. The reason was not because the technicals was wrong, but because of the liquidity heat map. You have to understand how exchange work, how the exchange make their money. They make their money by when the retail investor hit stop losses. On the liquidation heat map, all these bright yellow spots you're watching are stop losses. So we are pulling this from exchange, and we can see for the longs, the biggest stop loss sort of bulk is sitting at 63.7. For the shorts, the biggest stop losses are sitting at 65.4. I know for most of people this is new, so it will take time to learn. But if you watch it on a daily basis, these lights, think of them as magnets for the price. What the price will do is it will go up from how I see it. It will go up to 65.4, 65.5, liquidate all these retail investors, and then it will fall back to 63.5 or 63.4. And what I'm basing this as, I will tell you more information as we go through it. But for right now, from the liquidation heat map, if the exchange want to liquidate retail and make money from those liquidations, they have to take the prices up to 65.4, 65.5 in that range. And then they might take it even higher, but they will then drop it back to 63,200 or 63,300. And we will see if other indicators point at the same thing. The next top resistance level, based on the 4-hour and the daily, is 65,581. So that pretty much aligns with the heat map, which tells us that there's a huge resistance at this, where the price might reject. The next support are mostly at 64,000 based on 4-hour and daily, but I don't think they will hold. So that's the live chart, and basically you can draw your own lines in the system, but what I will believe is the price will go up to 65,000, let's 500 some area, and then it will be rejected somewhere here, and then it will fall down to 62,300, 63,200. So let's see what other indicators are talking about. The system is built over 100 indicators, and we won't be able to go through all of them. But that's the beauty of the system, that you don't have to understand all these indicators, all these values, because they're all built into the probability. So that's handled for you. You just have to make sure that the probability is at the right space, the manipulation, the market manipulation, when it's going to happen, and some fair value gaps, which we will talk through. But for the interest of time, we will quickly go over the 9 layers that the system looks into. It looks at the trend and structure, and there are dozens of indicators in trend and structures. Even I don't remember most of them, so I always have a cheat sheet of what each of these different layers are doing and what sort of value they bring. So let's take an example of trend and structure. In trend and structure, we have the EMA 20, 50, 100, RSI divergence, MACD, higher, low, lower, high, lower, low. And then the second one is Fibonacci. Remember, the most important Fibonacci from where the price should pick up is, let's see, is 0.618. That's where all the big investors, or all the major retail investors, put their buy orders at. So that's also sitting close to where the heat map was telling us, 63,212. That's a golden place. And on the top, the Fibonacci extension is pointing at 1.618, where is all the profit going to happen. That's where most of the investors are going to take their money out. So that also aligns with what we initially said. The price will go up to 65. So that's our third indicator pointing the resistance the heat map, and now the Fibonacci. They're all pointing at the price will fall from that area. Let's continue. We're not going to go through all the different indicators here, but some of them are that the whale positions are long. Probably they will close their position at 65,000. Let's look at the plan. That has some really important values. So as we discussed, all those hundreds of indicators are lining up in one of these 9 layers, which give them each layers a probability, which rolls up to the main probability. So as you can see, out of 9, only 3 are bullish, 4 are bearish, and 2 are, so it's not a good long setup. Macro market, it's a weekend, so S&P, NASDAQ, volatility, 10-year yields won't have any say in the market today. So it's not going to be one of those areas we should worry about. One of the most beautiful thing about Quantreef is market state estimate. We don't just tell you when to buy. We also are looking at the pullback. Let's say if you want to buy at a certain price, that's your pullback. You're waiting for 618. 63,200 right now. Then it's going to sweep a lower price, which is probably going to be the next support level. That's 61,800 or 62,800. Then it's going to reclaim and come back to the price you guys were looking at. The Fibonacci is 0.618, the 63,200, and then it will wait for confirmation, and then that's when the probability go up. So we do all the backstage work so that you don't have to worry about all the pullback sweep, liquidity sweep, reclaims, and confirmations. Stop watch hunt, as we talked about, market is being liquidated. There's liquidity sweep, and it's always happening. So the big whales and retail as well as the exchange make their money. So it's going to go high if it sees that the prices are at a level where there will be a market sweep. Other indicators like open interest, funding rates, CVDs, we will go through it in another video, but there are lots of indicators here. As we talked about, the next important level would be the 65,508. That aligns with Fibonacci 1.618. People have already taken their profit at the Fibonacci level 1.272, 64865. So either the price will go to the next extension, which is 1.618, or it will fall back to 0.618, 63,211 to get list of all those stop losses or liquidity sweep. Another most important indicator to show that the price are going to head back to 62,000, 63,000 level is the fair value gap. There are three fair value gap. One between 64,274 has a 93% probability. So that's pretty much on paper and will happen. The next one is between 63,518 and 63,884 has an 87% probability, and 62,347 has a 72. So these fair value gaps have to be closed before the market move in the directions of a long. So I wouldn't take a long here for sure, but wait for these fair value gaps to be closed. Wait for the liquidity heat map to liquidate all these users below 63,000 and hit the Fibonacci level 618. So all the indicators right now are pointing at a retracement back to 63 to 62,000 level. And not to make this video any longer, but I hope you guys get some value out of it and learn from it, and use this Quantreef portal to help you understand how these indicators work. But I will make daily videos on BTC XRP and the top probabilities, so you guys can see how to trade in a very informative and educational way. Thank you, everyone.